We detected an unusual trade on Tesla stock worth $10.3 million. And what's also very unusual is that Tesla reports earnings tomorrow, April 23rd, after hours. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is trading Tesla for earnings. Is it bullish or bearish? And then based on this data, we will reveal our earnings trading strategy for Tesla. As you can see on the charts, today Tesla dropped to a new low and is currently oversold on the popular technical indicator, the RSI. So does the technicals confirm with the data of unusual option activity? Will we bounce up from here because it's so oversold? Without further ado, let's take a deeper look at the data that represents the trades of wealthy investors. As you can see here, today, 11,288 unusual options being traded at 10:51 at the 14-second mark. Now notice there's also another trade happening at the same time. So this wealthy investor is actually trading 4 options. So we have to take a look at all 4 of them. Okay. And we can see that they are being traded for the May 17 options and the June 21st. So let's take a look at the May 17 options first. 140 strike puts and the 160 strike puts. 11,288 of them. On the chain here, for the May 17s, we can see the 140 strike puts, 21,000 open interest. So that is less than the 11,288. Same on the 160 strike puts. There's 28,000 open interest, greater than the 11,288. So most likely these are closing trades. Okay, they are taking profits on their vertical put spread. All right, and what they're doing is rolling their trade to the June 21st. And we can see here, these are the 140 strike puts and the 110 strike puts. Okay, there's 10,912 of them. So when we do a quick calculation of the cost of their opening trade, we can see they paid $12.50 for the 140 strike puts. We have to multiply by 100 since this is options pricing, so it is 1,250 subtracted by 305, because that's what they sold the 110 strike puts for. So each trade contract cost $945. Since they had 10,912 contracts or trades, we multiply that out and we can see the total trade cost of $10.3 million. Now keep in mind, because earnings is coming up in just one day, even though this is a $10.3 million trade, it is still a lower chance of profit trade in comparison to the trades that we share on our website. So if you want access to those trades that have higher probability of profit, we'll put a link at the top here. Make sure to check out our website to learn more on our option strategies, where we reduce our risk in order to increase our profits, and also find the stocks that the wealthy investors are trading, where the data is a lot more clear, unlike Tesla stock, which has lots of data happening every single day where there's a lot of wealthy investors that are bullish, bearish, and so the data becomes less clear. And so that's why it is not a high probability of profit trade, right? So if you want access to the better trades, then make sure to go to our website. So let's take a deeper look at the option chain for these June 21st options to make sure that they are opening trades. You can see here at the 110 strike puts, 5,607 open interest. That's less than the 10,912 unusual options. So we know these are opening trades. At the 140 strike puts, 12,405, that is slightly greater than the 10,912. So there is a slight chance that these are closing trades. Now, based on our analysis of other variables, there is a greater chance that these are opening trades, where they are buying the 140 strike puts to open and selling the 110 strike puts to open as well. And as we calculated earlier, they paid $9.45 for each of these put spreads, a vertical put spread. And you can see this is clearly a bearish short position as the price of Tesla goes down, which is represented on this x-axis here. Profit increases. Okay, that's what this y-axis here represents, profit loss. 0, if the blue and purple lines are above 0, it is a profit. If it is below, it is a loss. The blue line represents the expiration date. The purple line represents the current date. Okay, and so you can see the profit over here as we move the mouse along the price of Tesla to see where that profit or loss will be depending on the price of Tesla stock. Okay, so that's how this diagram works. Now, how did we trade Tesla based on this data? Let's take a look. For our April 26 options, what we did was we had actually 2 trades. This is our first part of our trade. You can see our positions over here. For the 130 strike puts, 128, and the 134. Okay. So for each of our trades, we sold 2 of the 130 strike puts, and we bought the 128 strike puts and the 134 strike puts. And so when we analyze this trade, you can see that this is a butterfly trade that is bearish. It costs $67 each. You can see that this is a negative delta trade, which is bearish. If it was bullish, it would be a positive delta. And you can see that as the price of Tesla goes down, this becomes profitable. If it goes up, it is a loss because this is bearish. Now, because there is a chance that we could rally because Tesla is technically oversold, and technicals sometimes become a self-fulfilling prophecy where most people buy because they see this signal that it could rally. We want to hedge in case it does rally. And the way we did that was we went to the call side, and you can see our positions over here. 155 strike calls, 157.5 strike calls, and the 150 strike calls. So we sold the 155 strike calls, 2 of them for each of our trades. We bought the 150 strike call and the 157.5 strike call. And so by putting these 2 butterflies together, you can see our trade. However, because this trade is actually slightly leaning bullish, because you can see the total delta is actually positive here, what we did was we added more bearish butterflies here. So there's a ratio of 2 of these butterflies that is bearish for every bullish long butterfly here. And by doing so, we are actually spending more on the bearish trade in comparison to the bullish trade that hedges our upside, and that we get a negative overall delta so that we leaned bearish short on this trade. Okay, and so you can see that it is higher profits towards the short side, and if we rally, we'll actually not lose, because you can see the blue line here is actually above 0. Okay, and that is why when you look over here on the profit here, you'll see it's $31 per trade positive. So it is not a loss if we rally. Okay, and if we rally to around 155, we could actually make $270 per trade. And if we drop, max profit of this trade, it's about $524 per trade. Right? So this is our double butterfly trade, leaning bearish, and that is how we will be trading Tesla. Let us know in the comments below, what do you think will happen to Tesla? As usual, please smash the like button, subscribe if you haven't, and if you are interested in the higher chance of profit trades, make sure to go to our website. We'll put a link over here. And let us know in the comments below, what do you think will happen to Tesla? Will it go up or will it go down? Please smash the like button, subscribe if you haven't, and have a great day. Take care.